This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil slipped on Thursday as a U.S. interest rate hike pushed up the dollar and fueled fears of a global recession, although losses were capped by concerns over tight supply. Brent crude shed 37 cents, or 0.4%, to $95.79 a barrel at 0426 GMT, while U.S. West Texas Intermediate WTI crude futures dipped 60 cents, or 0.7%, to $89.40. Both benchmarks settled up more than $1 on Wednesday, aided by another drop in U.S. oil inventories, even as the Fed boosted interest rates by 75 basis points and Chair Jerome Powell said it was premature to think about pausing rate increases.
Italy is attempting to weaken a pledge 10 European governments intend to make on Thursday to stop export credit support for fossil fuel projects, according to draft documents and sources familiar with the matter. The pressure from Italy comes as delegates from nearly 200 countries prepare for a United Nations climate change summit next week in Egypt, where world leaders will attempt to agree tougher action to tackle global warming. A group of ministers plan to make a joint statement on Thursday committing to end public trade and export finance support for overseas fossil fuel projects by the end of 2022.
Moving on to the top news in the energy sector.
British Prime Minister Rishi Sunak and Finance Minister Jeremy Hunt are planning to extend windfall taxes on oil and gas companies to raise nearly £40 billion, $45.55 billion, over the 5 years, The Times reported on Wednesday. Sunak and Hunt want to maximize revenues from the windfall tax by increasing the rate from 25% to 30% and extending it until 2028, the newspaper said, adding the scheme will be expanded to cover electricity generators. Downing Street and the Finance Ministry did not immediately respond to Reuters' request for comment.
The stronger price of crude oil is making it more feasible to use a higher mix of bio content in fuel in Indonesia, a senior cabinet minister said on Thursday, as the country considers raising its mandatory 30% mix of palm oil in biodiesel. The cost of producing biodiesel is cheaper than fossil diesel fuel at the moment, Coordinating Minister for Economic Affairs Erlangga Hartarto told an industry conference. Indonesia, which is the world's biggest palm oil producer, is currently conducting a road test for biodiesel with 40% palm oil content, known as B40. Next, we have the top news in metal markets. Copper prices fell on Thursday as risk sentiment soured and demand outlook for metals dimmed due to prospects of protracted policy tightening by the U.S. Federal Reserve. 3-month copper on the London Metal Exchange eased 0.1% to $7,621.50 a ton by 0242 GMT, while the most traded December copper contract on the Shanghai Futures Exchange slipped 0.1% to 63,500 yuan, $8,695.06 a ton. The Fed raised interest rates by 0.75 of a percentage point on Wednesday, and Chair Jerome Powell said the central bank was still undecided about how high rates would need to rise to curb inflation.
Iron ore prices rose on Thursday, propped up by continued speculation that top steel producer China would ease its strict COVID-19 rules along with hopes that Chinese stimulus measures would offset the impact of a global economic slump on demand. The steelmaking ingredient has rebounded after a rout in October, with gains largely driven by rumors that China would pivot away from its strict zero-COVID policy by next year. Officials have denied knowledge of such a rumored plan. It made further gains on Wednesday when Chinese regulators assured investors that economic development remained a priority, and that the central bank would be able to maintain positive interest rates for as long as possible.
We will now look at the top news in the agricultural sector.
Chinese customs updated its list of approved Brazilian corn exporters on Wednesday, a move a Brazilian agriculture official said could jumpstart sales of corn to the world's second-largest economy. The approvals could reshape global trade flows and result in fewer sales for farmers in the United States, the world's top corn supplier. China relied on the United States and Ukraine for most of its corn supplies, but Russia's invasion of Ukraine has disrupted exports. It is a good alternative for Brazil, having more markets to send products to, said Glauco Bertoldo, an inspections director for vegetable products at Brazil's agriculture ministry. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.